This is week 3 of Money Smart for older adults. Week 1, we discussed fraud, scams, exploitation, and you learned about our program here at the Senior Source called the Elder Financial Safety Center. Last week in week 2, we heard from our financial experts on planning for retirement, credit, and debt. And today, week 3, you're going to hear from myself about insurance. I'm the insurance counselor here on staff, and then the second half of our class, we'll hear from Erica Sampson. She is our benefits counselor. So my portion today is going to be called Insurance Necessary or Not. And the reason I use that title is that insurance plays a role in all of our lives, and we're going to talk about that today. But sometimes I think there's information that we get, that we receive, that leads us to maybe to insurance that may not be necessary for our needs. It might be necessary for others, but maybe not specifically for yours and mine. So that's what we want to focus on today, is whether insurance is going to apply to you. Is it necessary? Does it meet your needs, meet your priorities? So we'll talk about why we have insurance, why we need it, or whether we need it. We'll talk about different types of insurance that play a role in our lives. We're going to touch upon insurance fraud. And then we're going to talk about a big problem that's been going on for quite some time, and hopefully we can try and turn it around somewhat, but that's Medicare fraud. So before we begin today, let's talk about two things when it comes to insurance. There's really two things that you should focus on when it comes to deciding whether or not insurance is necessary. Number one, is it suitable for your needs? And the second thing, is it affordable? Because it doesn't make sense to purchase something such as insurance if you're not able to keep up with the payment, with the premiums. Okay? So if I can, I'm going to ask of you to just share with me, what are some words, some thoughts, first things that come to your mind when I say the word insurance? Life insurance, okay? Long-term care, okay? That's just the first, when I say the word insurance, what's the first thing that comes to your mind? Health, okay. Coverage, okay. Coverage, all right. All right, what about the word security? Do we use insurance so we can feel secure in our lives? Add a level of security? Yes. How about the word protection? Protection from what? The unexpected, right? High bills protect us from financial liabilities. Calamity, right. Disasters. Okay. What about risk management? That's really what insurance is about. It's about managing risk. We all assume certain amounts of risk each and every day. We all took some level of risk just to get here, correct? Maybe some more than others, right? So every time we get behind the wheel of a car, we're assuming some type of risk. Every time we leave our house, there's a level of risk. So it's about managing risk, using insurance to manage risk. So to that point, we're going to talk about these areas of our lives where we use insurance to manage risk: health and medical, long-term care, life, and then we'll start by discussing property and casualty. So insurance for our property, our homes. Maybe we rent an apartment and we're required to have renter's insurance. That's what we're talking about. So auto insurance. So when it comes to auto insurance, you see terms maybe on your policy like deductible, liability, comprehensive, collision, uninsured motorist. Do you know what these terms mean? A little bit, okay. All right. So My advice is to ask questions to whoever your agent is, whoever you purchase your policy from. Ask questions, say, okay, I see on my policy, I see these line items, and I see the cost next to it. Can you explain to me what exactly I'm paying for? Just have a general level of understanding of what you're paying for. So many people, they see these terms and they just, it makes them averse to wanting to even discuss it or to, because they're afraid they might ask the wrong question. That's a very common feeling about insurance. Especially as we get older, things become more complicated and we tend to just try to avoid things that might complicate us, overwhelm us. So hopefully this presentation will help you feel more comfortable in talking about these things. Homeowners insurance. So obviously that's there to protect us from damage to, we live in a area of the country where we're susceptible to tornadoes, hail damage, but also liability. If someone comes over to your property, they suffer some type of loss or injury or something, you could be liable for that. So again, that's where homeowners insurance can come into play. Renter's insurance. So renter's insurance can cover your possessions that are in your apartment or the property that you're renting. Plus, it could also cover if something were to happen, some type of a leak, some type of damage to the property. That's where your renter's insurance can come in and help cover that loss. Anybody have umbrella coverage?
We have had.
Okay. So umbrella coverage is just an extra, it's like a secondary coverage. So let's say your limits on your liability go up to, say, $500,000. Well, this can go up to, say, $1 million. Protects you if you are liable for someone's personal injury, maybe even death or something like that. It can cover you up to that point. So, did you know that you can purchase insurance for identity theft? You can add that. I think in most policies you can add it to your coverage, and it can cover the cost of if you suffer a loss from identity theft, like putting freezes on your credit report, any cost that's involved in the process, helping you just do a lot of the legwork that it takes to recover from a loss from identity theft. So, and also one other thing that identity theft can do is monitor your credit report, because that's really one of the byproducts of identity theft, is just the long-term effects on your credit report. Part of the process of acquiring insurance is underwriting. So what is underwriting? It's the way that insurance companies determine if you're insurable. What type of risk are you? And they look at things like age, gender, certainly what type of vehicle you drive, your driving record. They also look at your credit report. Debbie talked about this last week, that your credit can impact insurance rates, can determine what type of risk you are or what they think you are. Also, if you're married versus single is a factor that they look at. I think they look at married being maybe more stable is how they look at it. So again, all of these different factors. All right, let's talk about insurance for health and medical. So anytime we have to go to the doctor or have a procedure, or certainly go to be admitted to the hospital, have to go to the ER, we're being exposed to high medical expenses. We can either pay that out of pocket, or we can have health insurance in place to help pay for it. There's preventative care, there's the type of care that we, like seeing your doctor on a regular basis, having regular checkups, making sure that everything is working okay, so that maybe we don't have to face having to go to the ER for something. A lot of plans will have, say, high deductibles, which should make your premium lower. The trade-off is, though, that you have to have a high deductible, meaning you're paying a lot out of pocket up front before the insurance company will then start paying. And then once you've met your deductible, there's like a co-insurance, let's say of 80%, 20%, or 70%, 30%, where the provider is paying that higher portion, 80 or 70 to 80, but the patient is paying, say, 20 to 30% of the remaining cost. Prescription coverage, certainly that's, if you're having to take prescriptions on a regular basis, you want to try to be covered. If you're dealing with chronic conditions like, say, COPD, diabetes, those meds can get very expensive if you're having to take those on a regular basis. What it comes down to for health and medical is the doctors that you want to see, do they accept the plan that you're on? All right, let's talk about long-term care insurance. And what we're talking about is ways to cover the cost of needing long-term care. And I can't recall if Steve mentioned this last week, but I have it here, this statistic. 70% of people that are age 65 plus will probably need some type of long-term care in their lifetime. And that can be maybe receiving home health care at home, maybe having a personal aide at some point, just to help you age or transition at home. But then it can also mean you may have to transition to moving into assisted living, or maybe even more skilled nursing care. Well, that can be very expensive. The cost, skilled nursing per month, this is on average $8,460 a month for skilled nursing, $4,150 a month on average for assisted living, and then for home health, average of $4,862. Now, home health is what we see is generally an hourly rate of, say, $20 to $25 for that. But if you need 24/7 care at home, that can get very expensive at that rate, okay? Now, as far as who needs this type of care, there's a higher rate of females versus males needing this type of care. Now, if you're not able to purchase long-term care insurance, and trust me, the long-term care insurance has changed quite a bit over the last 25 years. Other options can be annuities. I believe Steve touched on this last week. An annuity is kind of like a life insurance policy, but it pays out over a certain number of years. It's a sum of money that you initially pay into. Personal savings or investments. There's Medicaid. Of course, Medicaid is very strict about eligibility as far as your income and the amount of assets that you can have. And then there's also these things that we've seen now in the market, hybrid products, and we'll touch upon that in a few minutes. But just generally, straight long-term care insurance is going away, and it's because 20 to 25 years ago, people could purchase long-term care insurance and they could purchase for lifetime coverage. Well, what happened was with dementia-like conditions and Alzheimer's, people are now living longer in that condition, needing that type of care. Well, what does that mean? The insurance companies are now having to pay out, which they did not forecast that they would have to do so. So they ended up losing money, and insurance companies are not in the business to lose money. So now you're seeing less options for just straight long-term care insurance, and you're seeing this, as I said, hybrid products, which we'll touch on here in a minute.
You have to guess how old when you die.
Well, I mean, that was, yeah, that's, Steve last week said that was one of the magic questions was, I have this much money, here's my goals, blah, blah, blah. The only thing that we all, we can't fill in is date of death, right? So it keeps us guessing. So let's talk about life insurance. So what's the purpose of life insurance? Well, it's really about financial dependence. Who do you have in your life that is dependent upon you for their financial well-being? If you have people like that, then life insurance is probably a reasonable option for you. If you don't, then I would say let's think about what's the relevancy of needing life insurance, okay? Also, just the future quality of life for those dependents, like education, just things like that. Also, maybe if you have a mortgage or you have financial liabilities, you could use life insurance to cover that. But one thing that life insurance should not be viewed as, and again, this is something Steve touched upon last week, is it should not be used as an investment. Now, there are life insurance products that will include investment vehicles, but just straight life insurance is about covering the unexpected, covering that loss. All right, in terms of life insurance, we have two different types. There's what's known as term, which offers a death benefit for coverage over a certain period of time, say 10 years or 20 years. And then after that time period, the coverage goes away. Okay? It doesn't accumulate any type of cash value. It's if you were to pass away during that time period, there would be a death benefit paid to a beneficiary. The other type of life insurance is cash surrender, where you have a death benefit, but you also are accumulating a certain amount of cash which you could borrow against. But be aware that it can take several years for that type of policy to accumulate a reasonable value. And a lot of times you'll see people who've owned these types of policies for, say, 5 years, and they can't keep up with the premiums, so they just let it go. Okay. Now, these types of policies can also pay themselves, which means if you're not keeping up with the premium, but there's a cash value, that cash value can just start paying toward the premium, which certainly then reduces the value of the policy. But at least it keeps the policy active. Okay? All right, I mentioned hybrid products. So these hybrid products are a type of product that combines benefits of long-term care and life insurance. So, because some people say, well, I've been paying for 30 years on this long-term care policy, and I just can't keep up with the premiums any longer, and if I stop paying the premiums, it's going to go away, and I'm left with nothing. Right? So that's a very strong feeling out there. With this type of policy, they would have the benefit of a death benefit to go with it. So it covers both sides. So if you were to pass away before you were able to access the benefits for long-term care, you would still get a benefit for passing away. Now, you do have to pay a single premium to this type of policy, but it also avoids having to pay future increases, because a lot of times with long-term care insurance, people are having to incur premium increases over the years as they try to maintain the policy. Again, insurance companies are just trying to this is just the way insurance works. They have to keep up with the cost, and so they pass that on to the insured.
How does a single premium payment work?
Well, so let's say, for instance, you pay $100,000 toward this type of policy, which means you now have the death benefit as well as the money for long-term care should you need it. You're not having to then pay any premiums future. So it's that incurring it's paying it up front, but not having to pay out over the long term, which
Significant premium.
it is. It certainly is. It's. You're right. It's. But again, it's just it's a way of addressing what's happened in the insurance market, which is just straight long-term care insurance is going away because it hasn't worked for the insurance companies, and so this is a way they're trying to appease people, try to make it work for them, for their needs.
Talk to my insurance representative. I would ask for the policy that combines benefits of long-term care and whole life.
Correct.
And tell me again what I would have to pay, 2 policies?
No, the way these work is you would pay an upfront premium, like a lump sum,
Okay.
and that's going to cover your death benefit as well as a benefit for long-term care should you need the long-term care before you pass away.
Whichever one comes first. If I
Whichever
take
one comes
long-term
first.
care, then it wouldn't cover life.
Well, it would still have that, but it's going to start. You're going to start seeing some benefits from it. So, it's people that, as Jackie said, we can't know what our date of death is, right? So it's people paying for the long-term care insurance, and they haven't been able to access it at some point, but they've been paying out for, say, 20, 25 years. That's a lot of premiums paid. If they were to pass away before they became eligible, that money doesn't go, that money stays with the insurance company. It's not paid out to beneficiaries. So this is a way of having that death benefit, which can go towards covering that loss. So, as I said, you see here, it's hedging. I put in here a way of hedging your bets. It's covering both sides of that equation.
If you pass away sooner,
All right, back to underwriting. So underwriting for health and life is a little bit different than property and casualty. They still look at things like age, gender, but they also look at your medical history. Are you a smoker? Usually the question is, have you smoked or have you used tobacco products in the last 48 months or something like that? 24 months, maybe it is. That's usually a question related to health, medical, or life insurance, okay? Again, it's all about determining risk. All right, when it comes to purchasing insurance, you can go about purchasing insurance by finding an agent or a broker who's licensed, hopefully, or you can contact the insurance company directly. But of course, as you've learned by coming here, you can find unbiased information, coaching here at the Senior Source. A really good resource when it comes to insurance here in the state of Texas is the Texas Department of Insurance, and I put their web address on here. If you're dealing with an agent or a broker who's licensed, you can find their information on the Texas Department of Insurance website. You can see when their license expires, and you can see what companies that they represent. So if you get in touch with an agent or a broker who says, I represent all of these companies, A, B, and C, you can actually go and verify that because it should be listed on their Texas Department of Insurance page. All right, insurance fraud. Well, believe it or not, seniors are a major target for insurance fraud, and it really comes down to the areas of health and life. And we see this quite often is there's a feeling with older adults is that they just don't have enough, and certainly that's the way ads are targeting seniors, is telling them they may not be covered, playing upon that fear. And many worry that they'll become a burden to their family if they don't have enough. I've seen clients here at the Senior Source who will purchase insurance policies for themselves. They'll purchase it for their grown children. They'll purchase it for their grandchildren. They're the ones having to keep up with all of these life insurance policies, these premiums, just so there's coverage for everybody. I think it's that maternal instinct, I'm sure that's plays a part in that. So, but if it's hampering them, if it's hampering your needs, then it's not doing any good to have all of this insurance. All right, Medicare fraud. So Medicare fraud is a $60 billion annual problem, and it's really three areas. It's fraud, waste, and abuse. So obviously fraud, you have people out there trying to take advantage of the system. Waste is, I would describe waste as medical billing right now. We have so much with medical billing. I mean, you get explanation of benefits in the, sent to you. Several pages long. Do we all go through every line item on those statements that we get? Do we have time to do that?
No.
But you know what? I bet there are errors in there. There's actually an organization designed to deal with Medicare fraud. It's called Senior Medicare Patrol. This is an organization that has volunteers. They train volunteers to go out in the community and actually educate people about fraud, waste, and abuse with Medicare. The Senior Source actually sponsors a chapter of Senior Medicare Patrol, okay? And their motto is detect, protect, and report. So try to detect or look for any errors going on with your Medicare. Protect your information. Don't give it out if it's not necessary. And then if you find what you think is fraud, waste, or abuse, then you report it. And here's the information to report that to. And they'll look further into it.
And so I always like to start off just kind of telling you a little bit about what my role is, so that way you know if you want to make an appointment, which I know somebody over there who's making appointments with us today, you might want to know what all I do, and I can set appointments. So primarily what I do is help people apply for state benefits. So that's going to be things like your SNAP program, Medicare savings, extra help, Medicaid, different things like that. I can help you as a brand new applicant, or if you have the benefit and you need help renewing it, I can help you with that. Or let's say you're encountering an issue. Perfect example. Erica, I was receiving $150 a month in SNAP last month, and now it's dropped to $23, and I don't know why. Can you help me figure it out? So I can help you figure out those issues as well. Another part of my role is completing care coordination calls. And so what that looks like is, let's say you get a letter from Social Security, the many letters you get, right, on a year basis, and you just don't understand what they're talking about, and you just need like an advocate or just somebody on the phone so you feel comfortable having that conversation with Social Security. I can be that person as well. With Social Security, Health and Human Services, any other department that manages benefits, I can be there to help you. And even if I'm not an expert in that, I will figure it out, and we'll figure it out together. Another part of what I do is I complete benefit screenings. And so what a screening is just kind of collecting some of your information, figuring out what your needs are, and seeing if there are any community resources or programs out there that can help meet that need and bring stability to your budget. Which leads into my next thing. I help people create budgets as well. Or if somebody has a financial goal for themselves, I can create financial coaching sessions with you to kind of talk to you, look at the budget, have another set of eyes, and just figure out how we can reach that goal together and how I can hold you accountable to reach that goal. I also provide utility assistance. That's just not me. Everyone on my team provides utility assistance. And just so you know, we have a grant for TXU Energy. We have a grant for Ambit Energy as well as Atmos Gas. Now, I know there are tons of other providers out there that provide lights. We do also help people get on what's called CEAP. That is a Dallas County program that can cover a lot of those other providers. So even if we can't provide direct assistance, we can help you get on that program at least. I also manage our intake coordination, and that's pretty much whenever people call the Senior Source and they choose option 3 for Elder Financial Safety Center, I manage that process and my intake coordinators and just making sure that calls are coming through quickly and we're trying to get to them as fast as possible. I also provide and do research for different community resources. And at the end of today, you will get a brand new updated guide that is front and back that will talk about some of the frequently asked resources that are out there in Dallas County that are free to you. I'm talking home repairs, free prescription programs, we have housing, a lot of different things. So everybody will get one of those today. And I know y'all see these lovely pictures up here, and you see two people dressed as Santa. That's actually me and Carl. What started off as a funny joke for a holiday parade that we try and do every year for our clients has turned into an almost 4-year-long tradition. And so I'm looking forward to doing it again this year. But as you can see, these are just pictures of some of the other events that I help coordinate every year. And so, why are we here today? Why are we talking about benefits? What can they actually do for you? I like to always say, look at utilizing state benefits as a way to regain control or maintain control of your financial health. What are some things that you worry about as an adult as you're aging? Let's just shout some stuff out. What is something that you worry about? Health. What'd you say back there, ma'am? I'm sorry. Lack of money. Okay. What else? What's something else that we're worrying about? Being able to age in place, hoping to be able to live where we live independently without having to rely on anyone else to come in and help us do things. That's a big one. How about housing costs? I know we were having a good conversation about that when you first got in, Miss Jackie, about the cost of housing and what is it gonna look like when I'm in my 60s or 70s and I'm on a fixed income. How can I afford where I'm living if the trend continues with housing increasing? That's another big worry. Oh, yes. She said mental health, mental acuity, just making sure that you keep your brain active so that way, you're good into your golden years. That's a good one. Prescriptions, that's another big one. 1 year, everything is only $4, and then the Medicare formulary changes, and then now my insurance doesn't cover it. That's a worry for everybody. And of course, maintaining a good health so that you don't have any other prescriptions that are added to what you already have, and now that's additional cost. This is another activity I like to do. It's called breaking down barriers. So before I talk about state benefits, what they are, what I help people apply for, I like to use this time for us to kind of just stop and think when we were ever in a situation where we needed help, where we maybe even considered applying for benefits, and some of the barriers that we may have faced ourselves that prevented us from getting help. What is an example of a barrier that may prevent somebody from calling a place like the Senior Source asking for help? Pride. Miss Jackie? Not knowing it exists, yes. Lack of knowledge. Maybe you've had a bad experience, tried to get help, you were denied, or let's be honest, it's not great asking for help and then you go into an office and that person treats you like you're nothing. That is enough to make you never ever want to even consider applying for benefits again. They treat you like you're less than, like they don't treat you with dignity, when it's already hard enough to ask for help anyways. That's a good one. What else? What's another reason why somebody may not ask? You said scams? Oh, yes. Oh, that's a big one. I don't even answer my phone anymore half the time if it's not saved. Because, you're right, because you're like, okay, what's real, what's not? And I know Carl had mentioned about a flex card. I remember when we first started hearing about that, clients were calling and saying, hey, I got this food card in the mail, can you help me get it? And the first thing I assumed was a scam, because I was like, I've never heard of this. But we did some additional research and found that some of these Medicare Advantage plans are kind of sneaking in some of these benefits like food cards that people can utilize. But that was the first thing I thought too, scam. Don't cash it, don't look at it, throw it away. But yes, scams, that's a big one. Anything else? How about fear? Fear. I know another one that I will personally say just for myself is that you just worry about what is somebody gonna think of me if I get on the food stamp program and I'm in line and I pull that card out. Just worried about what others may think of you in your situation. I've been there. I think we've all probably had a time where we've been there. Well, I want to use my client, Mr. C, as an example because he is someone I love talking about because he was just like y'all. He came to an employment event that we were having, and his main focus is, I just need to find a job really quick. Unfortunately, he was like a lot of older adults who had dedicated their lives to a company 30 plus years, and he was laid off. And so he found himself in a situation where he was evicted pretty quickly, and he was living in his car. And he came here because he was hoping that we can help him get into a job really quickly. Well, just like we always do, we talk about employment, but we always bring in our staff to make sure they understand all the things that are at your disposal to help you regain control of your financial health. And so I was speaking to him and I was doing the presentation I did today. And I remember he was one of the first people that raised his hand and said, oh, the government's not going to help somebody like me. And I was like, that is a very valid feeling. And so I just kind of leaned into that a little bit. And we used to do what's called financial coaching within that course, and I actually was matched with him. And so it was kind of my mission to create a rapport with him because I just wanted to help him as best I can. It took a few sessions and we had real conversations when he was ready to open up. But I said, what's the worst that can happen? You have somebody like me who's literally gonna do all the work for you. The worst the state can do is say no. But wouldn't it be great if we got you approved for something that could really create stability in your household? And he said, you know what, you're right. And so I got him to apply. And we actually ended up getting him on Medicaid, so he was able to go back to the doctors. I helped his roommate because I actually, through our conversations, I talked to him about some friends and family that may be able to help him. But he chose to live in his car due to the shame. He didn't want to tell people what he was going through. And so through our talks, he was able to talk to a friend who took him in instantly. And so it was great. Everything we applied for, he got approved for. He got the maximum benefit. And one thing I'll always remember is that he was just so happy because he did not like being able to provide the basic necessity, which was food for himself. And he said that that gave him just hope, and he felt good again to get out there. And it didn't take him long, but we were able to help him find employment, and he's doing great now. He's out on his own. And so that's a perfect example of how me and some of my colleagues will work with you just to help figure out what is your situation, what are some of those barriers, and how can we tackle those together. Okay. Now, these are just some quotes that I hear a lot from a lot of my clients. A lot of people think about some of the programs, and let's be honest, the state does ask for a lot of paperwork, and sometimes that return may not be worth the effort for some people. But I think I hear this second one the most. A lot of people feel like, you know what, it's just me at home. I got myself in this situation, and there are other people out there that I feel deserve the help more than me. And even though these are all true emotions, I still always like to say, every single one of us have donated to some type of program, some type of benefit, have pulled the angel off the angel tree to help another family in need. We've probably maybe paid tithes, given donations here, we've paid taxes. We've done a lot of things that bought into a system to help people, and there's absolutely nothing wrong with you benefiting from that system when you need it. So there is absolutely no shame in trying to get on these programs. Doesn't necessarily mean that you'll get it, but there is absolutely no shame in trying. And I'm not the only benefits counselor there is in the world. There are a lot of other programs out there that will sit side by side with you and go through this daunting process. So never let the application or the process be the reason why you don't apply for something that can be really beneficial for you. Another thing I like to point out too is kind of like what we talked about, I believe you mentioned it, that people have gotten denied in the past. I can't tell you how many people who have gotten false denial simply because the state did not do a good job explaining why you were denied. So sometimes people get denied. I would say 9 times out of 10, a lot of my clients that I've done gotten them on a benefit that they were denied from, it was simply because of missing paperwork. And we went back and we did the entire process over and they got approved. So never let the fact that you were denied in the past be the reason, because it might not be a true denial. Okay? So what benefits do I mostly help people with? Today we're going to talk about the SNAP program, Medicare savings, extra help, and then at the end I'm going to touch on what's called the NCOA screening tool. So SNAP, which was formerly labeled the Food Stamp Program. SNAP stands for Supplemental Nutritional Assistance Program. And for those who don't know, I like to put the picture at the bottom so you know what the card looks like because of the scams, right? I want you to know what the actual official program looks like. So in the bottom left, you're gonna see a white card that says Lone Star. That's the older card, but it is still active for people who still have that program and have been on it for years. But if you get approved for it now, it's gonna look like that card at the bottom with the white, yellow, and like that apple orange thing in the middle. I don't know what that is. But that's the 2 existing cards right now. And essentially, for those who also don't know, the food stamp program, if you're approved, it is a monthly stipend that is automatically loaded onto this card. You will set up your own PIN, so that way only you know it, and it will, depending on how long you get the benefit, every single month you'll get a certain amount. So let's say we get you approved and the state says, okay, every month on the 3rd, you're gonna get $200. Every single month you'll get it on the 3rd. Another thing I like to point out with this program, you don't have to use the entire amount. It does roll over from month to month. Because I know a lot of clients think, oh gosh, I have to use this or I'm gonna lose it. It does roll over. Now, I will say, let's say you get the benefit and they only give it to you for a year. Don't let it roll up for a whole year, because once you get into that 13th month, they will take all remaining benefits at that point. But it's okay to let it roll from month to month as long as you're within your benefit period. Any questions so far? I know I've kind of talked about a lot, but any questions about the SNAP program? Okay. And so just on this screen, I just want to highlight the middle bullet point. Dallas County does a really good job, and I'm not just going to say Dallas County, I'm going to say Texas. They do a really good job at tracking how many open cases there are, how many people are actually in the benefit, and how many people are eligible for the benefit. So as of April this year, Dallas County currently had 147,000 open SNAP cases, so that's going to be people who are actively receiving the benefit. But 28,000 of those cases were people 65 and up. There are a lot more people within that age range that are likely eligible for a benefit that could really help them. And so conversations like this, where you take all this knowledge and you pass it to your friends and send them here, is what's gonna help kind of demystify the stigma that is surrounded by SNAP. Because I mean, let's be honest, kind of like we already talked about, people will sooner get borrow from family, get payday loans, do all these other negatively impactful financial choices instead of maybe getting on a benefit or becoming active with a nonprofit that can provide food, simply just because of the shame of it, okay? So TSAP, this is also a part of the SNAP program, but I like to highlight this just to show how important advocacy really is. It did take a couple of years, but the Senior Source was actually a part of the advocacy for this legislation that was finally passed in 2021. And so what this did is it simplified the SNAP program for people who are disabled and people 60 and up. So I don't know who's ever seen that paper application for SNAP, but it's like 20 pages, front and back. It's huge. It is really long. But because of this legislation, there's actually a version that is only like 5 pages front and back now, which was a huge win. This legislation also created a longer period of time for people to get SNAP. So I'm sure you've probably heard stories where people will get the SNAP program for 3 months, and every 3 months they're having to renew the benefit. Well, now with this legislation, if you're a person who is disabled medically, or if you're 60 or older, you get the benefit for a 3-year period now, which is so big for my clients, especially when you're on a fixed income. Not too much is changing from year to year, so why should I have to renew the benefit every 6 months? So who can get on this program? I know it's probably really small on your handouts, but here you'll see numbers in blue, and depending on how many people are in your household will determine how much benefit you get every month and how much income you can have. And so I like to highlight that specifically because sometimes I have clients who may have family members or children who are living with them, and they think that the state will be upset to know that there's a second person in the household not working. In this particular case, it would actually help somebody. So if you're an older adult who maybe has an adult child who lost their job and they came home and you're helping them get back on their feet, letting me know that that person's living there will actually boost your benefit. So the blue numbers that you see as they increase based on how many people are in the household, and the red number highlights the maximum amount that you can get. So if I, Erica, apply for SNAP today, the most I can get is $281. But like we talked about earlier, the smallest benefit a person can get is $23. Now, we're not guaranteed the maximum, but people like me, other benefits counselors, are going to do our best to try and maximize your benefit by making sure that you bring in all of your pharmacy receipts, your medical data, rent, or mortgage, all that stuff that is really important when it comes to figuring out on the state end how much somebody will get approved for. So the next benefit that I help people with is Medicare Savings. Has anyone ever heard of this program, or is anyone on Medicare Savings? Okay, this is the first time I've had a class that nobody knew the program. Cool, so we're all gonna learn something new today. So Medicare Savings is a phenomenal program. So for those who are on Social Security, if you look at your award letter that the state sends you every year, you're gonna see your gross amount at the very top. And then on the next line, it's gonna say amount that we deduct for medical insurance. For most people, that's gonna be your Part B premium, right? So this program, Medicare Savings, if you are approved for this program, the state will not charge you for that medical premium. And so right now, it's $164 that is automatically taken out of people's Social Security. So Medicare Savings specifically will zero that out, and every year, unfortunately, this is on a yearly basis, so you don't have to renew this once a year. But once you get approved, depending on when we applied for the premium or applied for the program, we may be able to get you some back premiums that you paid that year. But moving forward, once it's enacted, they'll stop charging you that amount, which is huge for a person on a fixed income. So who can get on this program? I know it's small, but I hope y'all can see this. There are 3 different levels of QMB, and this is where it gets a little in the weeds here, but I want to highlight specifically the QMB program. So, well, actually, I'm going to start from the top up because that'll be better. So you'll see QI1 and SLMB there. Both of those levels only pay for the Part B premium. They don't do anything else. Now, QI1 and SLMB, the differences between those two is QI1 has the highest income limit of all 3. So essentially, if you are somebody who gets on the QI1 level just based on your income, you cannot get free in-home care through Medicaid. So essentially, the state looks at this as you're on QI1, you need to pick between the 2. So if I have a client who is at home and they need like somebody to come in and help them with dressing, cleaning, bathing, things like that, that the Medicaid in-home care program, it's called Community Attendant Services for those who don't know. But if you need the Community Attendant Services program, but you're also already on Medicare Savings, the state will make you choose one or the other. In my opinion, go with the Medicaid program because you're gonna get it's gonna cost way more to have to pay somebody to come in and provide those services for you compared to the 164. But essentially, those are the differences. So with QI1, you can't be on that program and a Medicaid-funded program. But if your income is in the SLMB level, which is a max of $1,379 if you're single, if you're married, $1,851. So if your income's right there and you are on Medicare Savings and you also need in-home care, you can get both on that level. So that's the only difference between the 2 of those. Now let's talk about QMB. QMB has the lowest income level. So if you are single, unmarried, and your income is at $1,153 gross or below, or if you're married and your combined household income is $1,546 or below, QMB not only covers that premium, the $164 that they're charging, it will also cover that 20% that Medicare does not cover. So it acts like a Medicaid, honestly. So a lot of my clients who are eligible for QMB have very little, if any, cost when they go to their doctors, get their prescriptions, because that QMB will kick in and take care of that additional cost. Okay. And so Extra Help, this is a program that's actually embedded within the Medicare Savings benefit as well. But you can also apply for this independently, because sometimes people's income is way over and they say, I'm just worried about my prescription costs, I want to get that down. We can apply for this program. And so what this does is you'll see a dramatic drop in your cost of your prescriptions whenever you have extra help. So for example, in the middle, it shows you that generic medications can drop as low as $4.15. Brand name medications can drop down as low as $10.35. But I'll be honest with you, some of my clients who have extra help, they don't pay anything out of pocket for their medications. Like I said, that's beyond me, that's in the Medicare weeds. So I don't know how they choose what's free and what's not. But there have been really amazing results for some of my clients who went from paying hundreds of dollars on prescriptions to nothing, or $20 or $30, which is a huge, huge benefit. And so at the bottom, you'll see the income limit. So if you're single, $18, $22, 50 cents or below. If you're a married person, $2,465 is the max for that. Now I will tell you, extra help has a lot of different levels, and so many levels I don't even talk about it. So they have whole extra help, they have a partial extra help. It's like if your income is way over, a lot of instances they'll be eligible for like a partial coverage. So it never hurts to apply for that program if you're not already benefiting from it now. So I don't know about y'all, but that was a lot of information. It was a lot of words, and for me, I'm actually a visual person. So if I was in y'all's seats right now, I would say, it sounds good, I hear what you're saying, but how can it actually help me? So I like to use an example, and my grandparents actually gave me clearance to use them as an example, because when I first started working within this role, I loved everything that I learned because I was able to make changes to my life. I took the information back to my parents and they made some changes with their life. But the first thing I did is I went to my grandparents' house and I said, Grandma, let me show you what I learned. Let me do a budget for you. Let's see what we can get you on. And of course, they didn't want me in their business at first. So it took some time, but I got through. And so we're gonna use them as an example and just show how state benefits can dramatically make a change to your life. And so you'll see pictures of us here, and I like to point out that middle photo in the bottom because I love seeing some of these older photos. And so that's actually my grandparents in the house that they're still living in to this day, and they're holding both of my uncles because my dad's the youngest one, so he wasn't born yet, but that's that photo. And so let's talk about the Sampson family. They were married at this particular time when I was working with them, 59 years, retired 17, living the good life. So I thought anyways, in regards to their finances. And so just like with them, I do this with all my clients. I sit down and I do a financial review because I want to not only tackle what you came here for, I want to see if there are other opportunities for us to try and make some changes and do some financial coaching and get you more stable. And so for them, like I said, they were retired, they had Social Security, so their gross income was $1,478 a month at that time. Back then, their Medicaid premium was only $109. It hasn't been that low, and I think I did this with them like 6 years ago. And so, but of course, after their Medicare premiums, they were actually only getting $1,264 a month. And so, like I said, they've been in this house for as long as they've known each other. But they actually had a mortgage because, like a lot of older adults or just people who were in a house for a long period of time, they had to take out an equity loan to take care of some repairs, and we had no idea that they did this. So at that particular point, they were paying $649 to try and pay this loan off. And so their utilities were relatively, good, as you can see, not too much there. Then, of course, the cable and internet, which was the biggest complaint, like, it used to be $20, now I'm paying $100-something. So I made a mental note about that, and we dealt with that later. But, we get down to some of the larger costs here, where you'll see, just based on everything on a normal monthly budget for them, they were rolling in the red every single month, $174.51. But that was before their prescriptions. At that point in time, my grandmother was going through something medically, and so she had 6 prescriptions. And to get all of those prescriptions filled at the time, at the frequency that she needed, it was almost another $400, which really showed their budget negative $570. And unfortunately, like a lot of people, she was mistaking her medication. She was only taking her pain pills when she felt bad. She was only taking her blood pressure every other week, or not every other week, every other day. She was mistaking it because, let's be honest, people are just trying to make it. And she was trying to stretch that medicine as much as she could. But because of that, it was, detrimental to her health, simply because she couldn't afford it. So just like I did with them, I talked to them about the benefits that I've already discussed. We did a full review. We did a screen. I told them what the benefits were, how it would work. And just like with them, if you sit with me and do a benefits application, I don't just disappear after it goes to the county. I'm here for whenever you start to get word from the state. If they're asking for more paperwork, if they sent you a letter and you don't understand, I'm still with you. So, and hopefully we get to an approval, and if so, I'll put it in the system so that way we know when it's time to renew next year. So that's pretty much kind of how that went, and the good news is I got them approved for all 3 benefits. And so at that point in time, they were approved for Medicare Savings, Extra Help, and SNAP. Now their SNAP benefit was $86. I was able to get that up because what I did is I completed a care coordination call to the state and found out that they were not including, that there was a mistake, kind of what Carl said, a human error on their end, and they were not giving them the medical deduction. And so I re-provided the proof again, and that benefit went way up. I can't remember the exact amount, but it was over $200. The Medicare Savings, of course, added them back the $214 that they weren't getting because they were being charged for Part B. So as we look at their budget post benefits, you'll see that we get down to the bottom and they're now in the green, $75, which was huge, from going to being negative almost 600 if they did everything they needed to do, to now we have a little bit of wiggle room. And so one thing I talked to her about was saving. I think that was not something that was talked about a lot in my family, because I feel like it was always just trying to get by, trying to get by, trying to get by. And so I was trying to reframe all of our thinking about what saving is. Even if it's only $20, if you're able to put $20 here and you do that for 5 weeks, you'll have $100. And when that tire blows out, you can pull from that instead of having to go get that payday loan. And so I talked to her and I did a little financial coaching. I said, Grandma, what is something that you've lost that you weren't able to do anymore because of y'all's financial situation? And she said, gardening. I said, boom, we're gonna save for gardening. What amount from this do you want to for sure save? And so at that point she said, let's do $50 a month. And so as the benefits came through, I got their cable down, we came together as a family and we were able to pay off that mortgage. She was able to save more and save more and save more. And so just that one conversation that I had with them dramatically changed their lives. And that's how it can impact y'all as well. So a lot of times after I've done this long period, I have some people who say, well, how's your grandma doing? I love that you talked about them and you shared their story. I just started to put it into my PowerPoint. So I'm not gonna get emotional, but 2 years after I did this, my grandfather actually passed away. And I know, whew. Anyways, but what was so great, and I remember she sat down with me and she said, I'm so happy that she did this financial review with me, because when she lost the love of her life, she didn't have to worry about finances because she had saved so much money. And we had made changes to their life insurance policies. We had gotten rid of the mortgage. You know, the normal stuff that people worry about when they lose or they go through a catastrophic event like losing a spouse. She was so happy that she had become more financially savvy. And we also got her later, I got her on, because we live in Denton County, and there's actually a home repair program there. She's been on it for 3 years. They do everything for her. I'm telling you, they've redone her bathroom. They've worked on her foundation, they mow her lawn. It's just amazing. So she's no longer having to pay for that. And so that's that, okay? And so in closing, I just want to talk about the NCOA screening tool. That's the National Council on Aging. And so this is an amazing benefit, not just for people who live locally, but from time to time we get people who call from out of state, because if you Google senior resource, usually the senior source pops up. So we get people that call from out of state a lot. And so what's great about this tool is I can put in any information from anybody, from any state, and I can pull up it'll create a report. that will talk about every single benefit that you're eligible for and other community state benefits that we can look into. And so if you or if anybody is interested in having a screening done, you can give me a call. I do have cards up here, but you can give me a call and we can do all that by phone. All right, and Carl, we can hand them the community resource guide. We'll pass that out to you, but other than that, if there are no questions, thank y'all.
So this concludes week 3 of Money Smart for Older Adults. We have one more week next week at this time. And at that time, we're going to hear from Steve Benton. He'll be back to talk about end-of-life planning. Debbie Burkham will be back to discuss financial management for caregivers. And we'll have a special guest speaker. He's an executive with a bank, and he's going to be talking about safe banking procedures and steps to take. And also he's going to talk about power of attorney as it relates to banking and financial management.